Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hi, and welcome to another episode of Business Innovators Radio. This is your host, Jerica Glasper, and I am really excited today to be introducing our special guest. Today we have Nyreen Sowah joining us as a guest. So welcome to the show.
Hi, how are you?
I'm great. I'm really excited to have you on, and I'm going to share with you guys a little bit about Nyreen. She is an enrolled agent and certified tax coach here in Dallas. She owns Citizens Tax Firm and is a strategic tax and business consulting firm which offers services to the exceptional. Her firm provides tax planning for small businesses, financial consulting, bookkeeping, and other business advisory services. Nyreen has over 10 years of experience as a small business expert, consultant, and liaison with German expats. She practices the concept of great tax planning. Her diverse knowledge and experience allows her to bring new and innovative ideas to her clients. Her job is to protect your blind side from the IRS while saving you as many tax dollars as possible. Her team uses audit-tested real-world tax savings that keeps your money in your pocket. When you bring Nyreen onto your team, you can feel confident that you are partnering with a professional who is honest and reliable and who will always have your best interest in mind. You can contact Nyreen by phone at 214-630-6553 or by email at Nyreen, Nyreen, at citizenstaxfirm.com. So I'm really excited today to be doing this show. Today, Nyreen and I will be talking about the new tax law changes, aka Trump tax, and how it will impact homeowners beginning as soon as 2019 when you file your taxes. All right, so before we dive into that topic, can you tell us a little bit about Citizens Tax Firm and how you help your clients?
Yes, I just want to say, first and foremost, thank you for inviting me to the show. I really love telling people, about the new tax Trump law. It's kind of confusing, but definitely. A little bit about Citizens Tax Firm. You pretty much nailed it. First and foremost, we do tax planning for small businesses and also startup businesses. There's just a lot of confusion out there when it comes to taxes. And we've just noticed over the last couple of years that a lot of small businesses are spending way too many tax dollars than they should be, pretty much. But it's just a misconception that they are not aware of the tax loopholes that are out there. Mm-hmm. There's a saying that says, don't ask, don't tell. Mm-hmm. So it's kind of like if nobody asks, then nobody will tell you. So we try to put the word out there, and we try to inform our clients on a yearly basis what we can do to try and help them.
I love that. Can you describe for me at least one major problem that you help small business owners and even individuals solve when it comes to their tax planning or their tax problems?
Definitely. We do have some clients where we work with electricians, for example, and there is a credit for electricians, R&D credit. They have no idea about it, which can save them literally up to $150,000 a year. This is no joke. This is not any type of scam. It is legal. Of course, there are ways and rules around it that we need to find out if that client can qualify. But just for that simple credit alone of being an electrician, that can save them that much money on their taxes every year.
And that is a huge difference in what you have to pay the IRS. That's life-changing and business-changing. That's amazing. I love that. Okay, so let's dive into some of the tax advantages that you see with the new tax law changes as it relates to homeowners, if there are any advantages.
For tax advantages, not too many tax advantages. When we're talking about advantages, it's pretty much stayed the same when it comes to anybody owning a home, as far as owning a home under $750,000. There has been a cap on the mortgage interest deduction. So there are a few things that have been kind of in the negative realm, but as far as in a positive realm, there hasn't anything been added.
Okay. Well, let's get into some of those disadvantages. And what are some of the disadvantages? And I guess if you could narrow it down to, let's say, the top three that you see, what are the top three impacts that the new Trump tax law changes will have on homeowners?
Well, the top three is definitely the mortgage interest deduction, then also home equity loan interest deduction, and then the last one would be the state and local property tax deduction. When we're talking about the disadvantage for the mortgage interest deduction, now with the new law coming into effect, basically anybody having a home loan up to $1 million, they can only take the mortgage interest deduction up to $750,000.
Okay.
So if they have an interest on their primary home and their second home, the cap is at $750,000. The good news with that one is it only applies to new mortgages on homes if anybody purchased a home after December 15th of 2017. So anybody that purchased a home before that time, they're grandfathered into the $1 million limit. But unfortunately, after December 15th of 2017, and of course, starting from this year moving forward, that $750,000 cap does apply.
Okay. And let's talk about the property tax for homeownership. How would that be impacted?
Yes, for the property tax, that one does affect a lot of people more so. That one, you can only deduct up to $10,000 in state and local taxes, and that includes property taxes as well. So if you're in a high property state tax, and as we all know, in those regions, the property taxes can be pretty high. They're pretty much going over the $10,000. There's a cap of $10,000. It cannot be more than that.
What was it before?
You can do unlimited. And now it's at a cap of 10. Yes, unfortunately.
Wow. So what areas of the country, what regions will be most impacted by that particular change?
Pretty much any state having state and local property taxes, but the major ones would be New York, Boston, California, pretty much those states where we know for a fact that the houses are much higher, the taxes are very high. That's when it would definitely affect people with homes.
Wow. And the third thing that you mentioned was home equity loan interest. How will that impact homeowners?
That's been an interesting one. Usually with the home equity loan interest, taxpayers were able to take out a home equity loan on their mortgage, which they usually would use to pay off credit card balances, pay off student loan, or maybe even use those funds for their kids to go to college, or even as an emergency fund. And then at the end of the year, they received an interest statement, and they can write off that interest on their taxes. Unfortunately, moving forward now for the new tax law, you will not be able to take that interest if you're using it to pay off credit card balances or emergency funds. So in this case, that home equity loan, you can only use that interest to write off if you are using that money specifically on improvements to your home. So that's when everything does change. An improvement meaning any new deck in your backyard, or, you're trying to do any new sidings or anything like that, then that's when you can take the interest deduction. But other than that, you cannot take the interest on anything else.
That's a pretty big deal, especially the property tax. That's going to hurt some people.
Definitely. The property tax is a big one, like I said, because in this case, it doesn't matter how much your home is worth. But when it comes to the property taxes, that helped a lot of people reduce, and in this case, reduce their taxable income, letting them get a bigger refund. Or if they owed, then using that property tax, it will help reduce the amount that they owe. Now there's a cap at $10,000. Whatever is over $10,000 is pretty much a wash.
Wow. That is a big darn deal. Well, what are some of the perceived obstacles that you think people have when it comes to reaching out to an enrolled agent or a certified tax coach for help?
Being in the profession that I am over the last couple of years, when I say enrolled agent, a lot of people think I'm an IRS agent. So so they'll automatically think I don't really want to tell her too much. But I have to let people know, hey, I'm on the taxpayer side. I help you fight the IRS. I help you get through any loopholes in taxes. So I'm rather on the taxpayer side than on the IRS side.
Mm-hmm.
And then also adding the certified tax coach with it, that comes also with extensive knowledge when it comes to small businesses as well. So even if we are doing individual taxes, which we're not doing too much, but of course, when we're working with small businesses, we do have to do their individual taxes. We always ask them all the questions that we can, and we tell everybody up front, if there's anything that we need to know, just put everything on the table, and we can work our way through the maze and put everything in direct order for you.
Yes, I love that. So are there any tax time tips for mortgage holders that you can share where they can potentially start to get prepared now for next year and all these changes that will take effect?
Definitely. Just having them remember with the home equity loan interest, if they are planning on taking one out, making sure that it's just for improvement on the home, not to pay off any credit card balances. I mean, if their state does allow it, because from state to state it is different. If their state does allow it, just make sure that they know, that they're aware ahead of time that they will not be able to take that interest on their taxes. When it comes to the property taxes, unfortunately, that one is just set in stone. So there's no negotiating when it comes to property taxes. Everything is based off of the state, in this case, the state taxes and where your house is located at. But I would definitely, as far as working around home ownership, I'll try to find other deductions that can be taken when it's not with the home. Definitely charitable contributions. That one has increased. So that's good news. It used to be 50% of your adjusted gross income. Now it increased to 60%.
Okay. Well, that's
most
good.
people also forget medical deductions, that anything that is paid out of pocket that your insurance doesn't cover, that is also a deduction to you as well. Now you can only take 7.5% of your adjusted gross income, anything over that, but a lot of people are not aware of that as well. So there are still a couple of deductions that you can take, definitely.
Yes. And what I hear you saying, in the fact that there will be so many changes to how homeowners can get deductions for the interest on their home or how they can spend the money, the equity that they take out on their home, is that they have to do better tax planning. So when is the best time to start planning for tax season?
The best time to start planning for tax season is really at the beginning of the year. I always tell my clients, if you come to me by April 15th and have me try to find you any tax deductions last minute, then it's too late. A lot of people are perceived as a notion, I don't want to do it, I don't feel like doing it, I'll just wait till last minute. But if you have a plan ready, then you will already know if you owe or what type of refund you're getting before Christmas time. That is our goal. We want all of our clients to know if you're going to owe or if we can save you money so that you can go into your holidays scot-free.
I love that. I see that you are definitely an educator and advocate for the success of your clients, which is something that is very admirable. And I know that you have a lot of clients that love you. So anything else that you feel like should be put on the table in terms of Trump tax? We're already getting to the impacts on homeowners, but I feel like in general, what are some of the things that we don't know? I feel like the IRS has made these changes and people got excited because they may have seen a little increase on their paychecks at work and they're thinking, hey, my tax bracket went down a couple of percentages. But in the long run, because I've looked this up and I know you have too, it's going to revert. It's good right now, but it's going to definitely go back to people feeling that sting of, the federal income taxes that are coming out of their check. And like you said, with the homeowners. And so what else is out there that we don't know about Trump tax that will impact us?
Well, unfortunately, when it comes to deductions on the individual side, the deductions on the Schedule A, for example, miscellaneous deductions, where people could actually write off deduction as far as if they're paying anything with tolls or gas for a job where they're not being reimbursed for any uniforms, any tools, supplies, union dues, subscriptions, all that unfortunately is going to be cut off. So that section it does not remain anymore. So for those people who are paying a lot out of their pocket, maybe traveling doctors, for example, they're going from hospital to hospital. They're taking, pretty much stepping in for other doctors going on vacation, for example. They will not be able to write off those mileage or gas. And because of the new tax law happening, we always try to suggest to them if they go to their employer and maybe negotiate their pay, their rate of pay, or maybe even getting that mileage as a reimbursable benefit back into their paycheck since they're not able to write that off anymore. Some people are not aware. They just think, okay, this is my paycheck and this is how much I earn. I can't negotiate. You can negotiate when it comes to things like that, definitely. When we're talking about small businesses, on the small business side, it's going to be great for small businesses.
Okay.
The tax brackets are going down from the highest tax brackets at 35% is going down. They're coming up with deductions called a qualified business income deduction, where small businesses now can take advantages with their wages. For small business, it's going to be excellent. I think a lot of small businesses are going to be extremely happy when it comes to the new tax law. When it comes to the individual side, it really depends on your income range. A lot of the tax brackets, they will be decreasing as well. So pretty much the middle to lower income class, if they're getting a refund, if they've been getting a refund for years to come, they might be possibly seeing a bigger refund. And vice versa, if they were owing, they might not owe as much anymore. So it really depends on the income range, like I said. But definitely, it's going to be more like a roller coaster ride when it comes to the individual taxes because so many things have been taken away. So I always tell my clients, once you file your 2018 taxes, just see this as a virgin tax return, your very first tax return that you've ever filed. Don't compare it to any past year taxes because you can't compare it. All the numbers are changing. All the brackets are changing. Everything, all the income deductions that you used to take in the past are being taken away. So.
Wow. So do you feel like the IRS is doing a good job on educating the public about this?
Yes and no. I mean, the IRS does have their publications online where people are free to go online, but really, who has time or who is willingly wanting to go online and read a publication about the IRS? I mean, if you're not passionate about it, it's going to be the most boring thing to you ever. So I think it's really in my field of enrolled agent, accountant, CPAs, I think it's really our job just to give the public more knowledge about what is going on, especially with new clients or previous clients. I always try to inform them of the new changes. The goal of myself and my firm is literally by the time you walk out of our office, you will know what your adjusted gross income is, and you will know your tax bracket and what deductions you were able to take on your personal side and the business side. We have a lot of clients that come in. They just say, hey, just do my taxes. Just let me know if I owe or if I'm getting a refund. But I think it's very important to know just the basic of your tax return, just so you know what is going on in your business and on your personal side.
Absolutely. I love that. Well, can you share an example of how you've helped one of your clients overcome some of the perceived obstacles they had about tax planning? Maybe they were like, hey, I don't need tax planning. And then you do tax planning with them and they find out that they're like the electricians, I believe. Or do you have any other case studies or success stories like that you could share?
Yeah, we did have an insurance company. They sell insurance for truckers. They had just started off, a brand new company, and they were pretty much as a sole proprietor, as an LLC partnership. In this case, there was 3 members of the partnership. And when we had done their taxes, we noticed that the income that they had made for the year, it was over $500,000, but they were still being taxed as a partnership. So when we were going through all their incomes and deductions, we saw that we could actually switch their entity level and they could save so much on taxes. Even though they came to us, as usual, after the April 15th deadline, we were able to set some things in stone and negotiate with the IRS as far as changing their entity for that same tax year. Actually, that year we were able to save them $20,000 in taxes just by switching their entity alone, which they had no idea about. They thought they had the best entity. They thought they had to do partnership because it was 3 partners, so they figured we're partners, we do partnership.
Right.
So it's kind of like that's when we were able to sit down with them step by step and show them the difference. Hey, if we switch this entity, then this is how much we're going to save you on taxes, not just this year, but moving forward, even when your income does increase. That definitely helped them. And just, little tax deductions like that. Of course, there's so many different loopholes. The IRS is so vast. Even though I've been doing this for over 10 years, I still don't know all the rules for the IRS. But definitely, that's what we're here for, to inform each and every one of what their rights are and what deductions can be taken.
I love that. That's an amazing story. And I know that $25,000 can mean all the difference to a small business, whether it's investing in hiring someone part-time or investing in more marketing, investing in maybe infrastructure for a building or whatever it is. I mean, $20,000 is a big deal. So
yes,
kudos to you for that.
Happy. Thank you. They were extremely happy too.
Yeah. And what on the individual side could you share with us, like, as it relates to a success story? Maybe an individual that didn't really care about tax planning until they came and spoke with you and your team and saw that they were leaving a lot of money on the table.
For the individual side, actually, in talking about homeownership, this was actually a new homeowner that had just bought their home. For some reason, there's a perceived notion out there. I don't know if you remember back in 2008 with the whole crash with the housing market, and the Obama administration came in and was able to give first-time home buyers credit.
Yes, I remember that credit.
Yes,
yeah, everybody was going for that credit.
Yes. Now, 10 years later, a lot of people still think that, okay, I bought a new home. What credit can I take? They're still in that first-time home buyer's credit. Mm-hmm. Unfortunately, it doesn't exist anymore. So, of course, talking to them, they had just bought a new home, not knowing that when we were looking through their documents, they hadn't even brought in their interest deduction, their mortgage statement, their property taxes. They hadn't brought that in. And just alone on the property taxes, they had paid about a little bit over $12,000. So when we were going through in conversation, when they first came to us, we had no idea they even bought a home. It just happened to be that we going through our questionnaire, we found out that they had a home because we were pretty much done with the taxes. And once we found out that they had actually bought a home, we were able to put that deduction on their taxes, and it made a huge difference for them.
That's awesome. I love success stories like that. What you do is very impactful for people. I mean, money.
Thank you.
We need money.
Yes.
We can save it. That's all the power to whoever's helping us save it. So
definitely.
That's amazing, amazing story. All right. Well, I would love to know what inspired you to become an enrolled agent and a certified tax coach. What is your personal story behind that?
Well, when I started doing taxes, I just started doing taxes for myself, and then one thing led to another. I started doing for friends and family. Well, in this case, I saw a lot of friends and family, especially going to college, not taking the American Opportunity credit. Just so many credits that I've seen were not being taken. Mm-hmm. So just being the way I am, I love puzzles. The IRS tax code is just like a puzzle to me. You pick and choose what credits you can take, see if that can be taken, where it can be taken, and you put the pieces together. So I loved it, and I dived right into it. I started off then with after I did individual tax planning, I jumped into small businesses. Then I started getting more into representation, which I got my enrolled agent license. With that one is more representation of clients that owe money to the IRS, where you do represent them if need be in front of tax court. So that one, I did that for a little while, but something kept pulling me more and more towards small businesses.
Okay.
A lot of people were asking me, we start having a lot of small business clients. They start asking me questions about what can be taken. And I pretty much took off from there and just made that my go-to plan, just pretty much getting out there, letting small businesses know, hey, this needs to be done. We need to plan ahead. I would love to help you.
Yes, I love that. I love that. And so I guess what I would like to know, because I hear your passion and I see how you help people, and I can tell that you have a tremendous work ethic and that you are all about the customer experience and doing what's right for the client 100% of the time. What can you share in terms of a lesson that you may have learned early on, just like your philosophy, your mantra, that still impacts how you do business today with your clients?
When it comes to anybody owning a business, If you don't plan, you're planning to fail already.
Yeah.
And everybody pretty much knows that. Whatever industry that you're passionate about, there's always a plan, a step process. Step 1, step 2, step 3, step 4. And it comes with taxes the same exact way. When people hear that word, they're just dreading of it. They hate it. They don't want to talk about it. Everything's being delayed. And myself and my firm, we're pretty much out there, hey, just leave it up to us. Let us take care of it for you. But while we're taking care of it for you, you are also going to be in the know. You still got your hand in your business as well. We're taking the legwork off from you, but we're coming back and informing you what is being done step by step, pretty much. Hey, you have this much in your budget. You can use maybe this much money to fund, whatever supplies and materials you might need, and you're not going blindsided throughout weeks and months, and then at the end of the year, you're broke.
Oh, yeah, that's important.
Yes. So that's pretty much my number one goal.
If you don't plan to fail, then you fail to plan. Is that how it goes?
Yes.
I love that one. Yes. What's the most important thing that homeowners should consider when they are evaluating what enrolled agent or certified tax coach they want to work with?
Definitely, when it comes to that, try to find out about their license first. The second is if you are doing a one-on-one with an enrolled agent or certified tax coach, or even just your CPA, tax preparer, just anybody doing your taxes, ask them some questions. I mean, kind of drill down to find out what their goal is, what they're willing to help you with. Try to find out, if they are asking you any questions to help, push you forward. If I see an individual with a very high tax bracket, and I'm talking about maybe a married couple earning combined income of, I'm just saying an example of $275,000, $300,000 of W-2 earnings, and that's it. I might ask them, have you guys looked into real estate? Have you maybe looked into maybe renting out a property? Just to help with that, lowering that income bracket, giving them new, fresh ideas that, okay, you're doing the same thing over and over and over again, but there are opportunities to help lower that tax bracket. Yes. Have you maybe thought about, what is your passion? What do you like doing on the side? I've had some customers that just, she had a garden with fruits in the back, blueberries and raspberries and strawberries, and she'll just do jam and give them away to her friends and family. I said, that could be actually a little small business for you. By the time I knew it, she had made it into a business, started selling it on the farmer's market, and that helped them significantly then lower their income just by something so little that they had no clue about, that they can actually increase it as far as wages and then also take it as a deduction back on their taxes.
Yes, I love that. So does it cost anything to get an evaluation with an enrolled agent or a certified tax coach?
Depending on the services, when it comes to small businesses, we do a complimentary tax review. So what we do, if anybody's wanting their tax returns reviewed, is not too late. Even if they've already filed for this filing season for 2017, we still do reviews. We do a complimentary review and see if we can help them as far as save. When it comes to any other financial advisory services, we do have some consulting fees starting at $175. In this case, we do have staff on board for any life insurance or home mortgage protection. So that one gets more into the nitty-gritty, trying to find more of their personal finances. Okay. But when it comes to the tax planning side, there is a complimentary tax return review.
Okay, and that applies to individuals as well?
Correct.
Okay, awesome. And how can someone find out more about you and Citizens Tax Firm and how you can help them?
They can go on our website, www.citizenstaxfirm.com. And then, as you mentioned earlier, give us a call, 214-630-6553, or definitely my email as well. And I'll definitely be happy to help.
Awesome. Well, I have completely enjoyed our interview today. I love the information that you shared. And again, guys, this is Nyreen. Nyreen is joining us. Her contact information will be just below this interview. Thank you so much. I really appreciate your time today. And I look forward to seeing you out there more, sharing this information with the public.
Thank you so much, Jerica.
You're welcome. Bye-bye.
Bye.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.